Hi there and welcome to our segment, Cut Through the Noise. So today we are going to answer common questions that we have been hearing throughout the month, along with what's going on around the world. And as always, if you have a question that you'd like us to answer, please drop a comment below, or you can send us an email at admin@onedegreeadvisors.com. So let's get right into it. Anthony, the first question we have here is, what are the advantages of an index fund?
Advantages of an index fund. Number one, low cost. That's the main thing. So buying a fund that doesn't put a lot towards the expenses, more towards your bottom line. Beyond that, I mean, you're really looking at the behavioral aspect of it. If I'm following a certain index, I'm more likely to stay involved because that's what I'm comparing it to.
Yeah.
And then really for those broad-based indexes, it's ensuring that you do own the winners. I mean, if you go back and look 10, 20 years ago, what were the top performing companies? A lot of them are not the same today. And we don't know what's going to happen in the next 10 to 20 years. So by broadly investing, we're more likely to capture those winners.
Yeah, definitely. Can't agree. I mean, again, we're big proponents of index funds. You can use them within a certain portion of a portfolio to take advantage of its pro characteristics, and then you have to be aware of some of its cons characteristics.
Yeah. All right, next question for you, Alex. Should I diversify by having an IRA and a 401k?
Yeah, that's a good question. I hear this quite a bit. And again, it goes back to a basic understanding that an IRA and a 401k is just an account type. When we're talking about diversification, really what you're focused on there is the investments inside of each account type. Right. So, you can have investments inside an IRA and investments inside a 401k. If they look identical, you're not diversified. So diversification happens within the account type.
Right. And there can be matches that a company provides within a 401k, and those things need to be considered as well.
Absolutely. All right. The third question we have here, we're hearing this a lot, especially with the current environment, it is, should I refinance my mortgage or wait for rates to drop lower?
Say go for it. At least that's how I usually answer the question. I mean, unless you have unique circumstances and everyone has to consider those factors, is go for it. And one of the strategies that's worked really well in this downward trending rate environment is to refinance with either low or no closing costs. Now you might pay a tick higher on the interest rate, but it's worked really well because then you don't pour a bunch of money into closing costs. You lower your rate, lower your payments, and then if rates go down lower, you're not really feeling that remorse of paying a bunch of closing costs.
Especially, and this becomes even easier too if you work with either like a more modern bank or a really good mortgage broker who can do a lot of things electronically, DocuSign, just click, go through the process. That takes a lot of the headache away too if you have to do multiple refinances.
Yeah, absolutely. All right, final question for you, Alex. How do I generate retirement income during volatile markets?
Yeah, that is a great question. Of course, getting at a lot with what's going on right now. The best way to really create systematic retirement income is to, first of all, understand your goals and priorities, but make sure you're well diversified. And I'll give you an example. If we look back to March of this year when the markets kind of dropped off on a cliff, if you're taking systematic income, the last thing you want to do in March is sell from your stocks, right? They've just dropped 30 plus percentage points. We don't want to sell those. Let's instead look at our bonds and our cash, high quality bonds and cash, to generate our systematic income. We give our stocks time to recover. And when they do recover, then we can take some of the growth off of the stocks and replenish our bonds and cash. But it's all about having a plan ahead of time. It's a systematic process to make sure, I'm going to help insulate myself from short-term market risk to make sure I don't have all these fluctuations that I'm worried about it.
Yeah, really important for the sustainability over the long term. Those are the types of things that we help retirees with as well.
Exactly. All right. Well, again, this was our segment, Cut Through the Noise. We hope it was helpful. If you have any questions that you would like us to answer, again, please drop a comment below, or you can send an email to admin@onedegreeadvisors.com. We look forward to talking with you.